Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Harmony One. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that. Before watching this one, it's going to be linked in the top right hand corner of the screen. Now let's jump straight into the TA. Taking a look at the daily chart, you can see that Harmony One has pulled back down to its original low in January 2023. So we are about to print a double bottom pattern if we manage to hold this low. So if we start losing the January low and we drop below that, obviously the double bottom pattern is invalidated. Now you can see the support below here is set at roughly 0.00778 cents, and that is because we retested this level as support in September 2019. We retested it as resistance in December same year and also in January 2021. So a lot of altcoins have already dropped below the January 2023 low. So I would say it is very possible for Harmony One to do the same thing. Now, if I was looking to start building a position in this project, I would probably start averaging in right now because this is a pretty good price. From the February high, we're down approximately 68%, which is also pretty good. From the all-time high price that we printed in January 2022, we are down 97%. So these are definitely good buying prices. And as you can see, I just added a Fibonacci retracement with the swing high in February and the swing low in December. And you can see the 1.618 is sitting at 0.0051. So basically half a cent is going to be our technical target if we drop below this low that we printed back in January 2023. So you can also start targeting the 1.272, which is going to be the minimal target at 0.00737. You also have the 1.414 fib at 0.00636, and obviously the 1.618 that we just discussed. So these are going to be your major targets to the downside if you start losing the low. If we take a look at the daily RSI, we once again dropped into the red support block, and as you can see, every single time since May 2022, when you entered the red support block, you had to move to the upside. So if you're looking for some short-term potential, short-term trades, you can probably look at some entries right now and start taking profits once we run into the closest resistance level. So in this case, that would be the 20 EMA on the daily chart, and you also have a major resistance level over here that's sitting at 0.01359. And if I just zoom in a bit more, you can see that this is a support that we held back in November 2022. We broke above in January. We failed to hold it as support, so we broke below it one more time. There's a good chance that we're going to come up and retest that as resistance before we start moving back down. So potentially you could be looking at approximately from where we are right now, a 30% move to the upside. If you're going to take profits at the 20 EMA, this could be a 23% move to the upside. So based on the daily RSI, like I said one more time, we are good for averaging in. You can see that we are below the index of 30. So we are oversold. We're sitting at 26.2. This is definitely a good buying opportunity. Now let's switch over to the weekly chart. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40 plus low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. Taking a look at the weekly chart, we're going to add a Fibonacci retracement from the high in January last year to the low that we printed all the way back here in July 2021. And you can see that we are below the second fib level. Let me actually see if we have the fib level, the fib log, okay. And I believe my chart is set to log as well. So as you can see, the Fibonacci retracement, the second fib level on the fib, I should say, is sitting at roughly 0.0117 cents, and we are already below that. So what you can do in this instance is you can add more fib levels to the downside. So for example, you can add the 2.414, the 2.272, and those can be your additional levels to look at. But what I've done instead is I added a support block, as you can see, from 0.0102 down to 0.0076. Now this support block is based off of this local high that we printed in December 2019 and this local low that we printed in December 2022. So we broke above in February 2021 over here, and you obviously went all the way up to 35 cents, and now you're pulling back down and you're coming back to this level and you're retesting it as support. There's no problem to retest it twice or even retest it 3 times as support before you eventually break to the upside. But if we start losing this support block, that's going to be quite negative. That might take us deeper into the pullback. We might retest 0.004 cents, which is going to be the January 2021 low. Now, we don't really want to do that because it's going to drag us down and it's going to take longer for us to recover, obviously. But if you're bullish on the project, the lower the price is, the better it is for you. If you're holding for the next few years, the lower it goes, the more happier you should be, or the happier you should be. So that's what I have for the weekly chart. We are quite overextended from the 20 EMA, so we might as well retest this as well, because we haven't tested the 20 EMA since April 2023, and that would be a 64% move to the upside. So maybe August, September, we have some sort of a rally. Maybe we rally all the way up to this descending resistance trend line that we have retested multiple times since August 2022. Maybe we run into it one more time and have a pullback from there into October, December, and from there we have a massive move to the upside. So that's just something that you are going to be considering if you're looking at the long term. We're definitely going to be breaking above that resistance trend line. Once that happens, that's going to be a major signal. So we don't really need the fib there. If we take a look at the weekly RSI, you can see that we are coming down to this ascending support trend line. We retested it once in June last year, once in December last year, and now we're potentially going to be looking for another bounce. So once you see the RSI over here, just imagine that, just assume that there's going to be a pretty good chance of you bouncing just like you did the previous 2 times. And just, speaking purely from a mathematical standpoint. Now the stochastic hasn't pulled back down to the oversold yet, so you may want to wait until that happens, until you're sitting down here. But based on the price action, you're already at a very good buying opportunity, so you may want to put in some money right now and then wait until the stochastic bottoms out, and you may want to average in if the price drops with that as well. So this is not a financial advice, but these are very cheap prices, guys. If you were buying Harmony One back here at 15 cents, you definitely want to be averaging in and bringing down that average buy-in price. So I want to thank you all for watching this video. I hope you learned something useful. I hope you enjoyed the video. Let me know what are your long-term targets for Harmony One, and I'm going to see you in the next update. Take care and goodbye.